What's up, guys? Welcome to part two of our three-part webinar this week. Today's topic is going to be all about how to analyze crowd sentiment using Sanbase and various sentiment tools. We'll be getting into various ways that you can use crowd sentiment metrics on our platform to gauge how the majority of traders are viewing any specific crypto asset or the totality of the crypto markets at any given time. You'll see plenty of examples. Feel free to ask questions on how certain things are used effectively. We're going to do our best to really walk you through from start to finish how to use each of what we think are the most powerful tools to give you an advantage in the markets through our platform. Just as I mentioned yesterday, we're not here to give investment advice, and we're really not even going to be using these webinars as ways to snapshot where we are in the markets or give specific examples on assets. This is supposed to be a 45-minute to 1 hour introduction to how to use sentiment metrics most effectively. So keep that in mind. And if you do have questions about, specific assets and where we are in the markets in the context of sentiment, we'll definitely be going over that, but you got to wait until Friday for our This Week in Crypto call, and that's where we'll really get into the meat and potatoes of what our metrics are looking like from a market perspective and future price movement perspective. For today, I'm going to get into our sentiment analysis, how we calculate sentiment score, and really how we have built our platform to measure crowd sentiment and greed versus fear using various tools. So right now, what I'm showing is our Santiment Academy page and highlighting the sentiment metrics section. You can all go to it by going to academy.santiment.net. You can use the search bar, type in metrics, and you'll see sentiment metrics right there toward the top of the page. And what I'm showing here is essentially how we define it. We define sentiment analysis as the problem of computationally identifying and categorizing emotions, opinions, and subjective information in a given piece of text. We use a score, which is, sort of used with a proprietary algorithm. We give mostly complete transparency on how we calculate it, but there's some pretty big complexities into it that I won't go over today. But you can certainly read, the nitty-gritty of the mathematics involved, how we actually come up with, figuring out what is considered to be a positive versus negative score. Each asset has its own score, right? So there will be a resting mean for how often Bitcoin is talked about positively versus negatively. And when that ratio skews more positive, that's when we deem it as positive, and you'll see it in many of our metrics like weighted social sentiment that we'll get into. And if it's talked about more negatively and you see a lot of comments like the top is in or we're about to crash, that's when you'll start seeing that things are showing up negative and you can act accordingly. You'll notice in basically the context of all of our analysis today, we'll be explaining that whatever the crowd typically is seeing for an asset, the opposite is generally the path that the price will move more often than not. It isn't 100% the case, but when you see an extreme positive assumption about an asset, that's generally a sign that the price is more likely to go down than up. And when you see people extremely showing a lot of FUD and extremely negative or skeptical, that's the time where prices generally rise. So keep that in mind. And many of our, even our own members, are still kind of learning that concept because it's a hard pill to swallow at first. Thinking that whatever the crowd is deciding, you want to do the opposite. It's not an easy thing to do in trading, but we have enough history on our side to really prove that that's an effective way to trade. And we'll get into a couple strategies and ways to identify when those extremes are occurring here on this call. So that's it for the Academy page. I want to also quickly talk about our emerging trends, which is essentially our list of top 10 words that describe which topics are emerging the fastest compared to their resting means. This doesn't mean that they're extremely positive or extremely negative. It simply means that, Dogecoin, for example, which has been in the news a ton, it's being mentioned way more than usual because of its massive historic price ascension right now. So whether people are talking extremely positively or they're extremely skeptical of it, the fact is it's kind of a mainstay on our emerging trends right now. And our countdown here will essentially recognize that and show that it's one of our top emerging trends. So I'm going to get into that right now and show that we have Doge respectively at number 1 and Dogecoin respectively at number 3. We also see other assets like Link and Litecoin currently in our top 10. This means that the three assets, Doge and Dogecoin, are taking up two different assets, but we have three different assets that are firmly in the top 10 right now. Those three are getting a massively larger number of mentions than they normally get compared to their respective means. Usually when this happens, we see a bit of a decline happening, especially once they hit the top three like Dogecoin currently is. It doesn't necessarily mean the top is in right then and there, but we'll get into one of our back tests that has covered why this phenomenon happens. Dino has a really good write-up on it that he'll touch on right after I finish this introduction period here. And you guys can, of course, ask questions about it, and we'll try to specify as clearly as possible why we think the emerging trends here is such a powerful tool, especially when you see a pumping asset such as Doge or even Link, which had a really great 12-hour period recently. Why it's important to gauge when they start to hit that top 10 or so, especially top three, and how to act accordingly to take profit and perhaps buy back in when it drops out of the top 10 or so. So we'll get into that soon, but the Sand Trends tool here is really great because not only can you look at the trends to see which ones are rising the fastest, you can see their social volume increases, even see the mentions over the last 7 days in a simple chart widget. You can see the connected words to it, which is a really fantastic way to identify which related topics are tied to it when comments are made. But over here at the top, you can also enter a word or a phrase or even multiple words to see on a nice chart like so, when like over time, how the social volume has fluctuated. So what we're looking at right now is a contrast between the mentions of Elon here in blue and Doge here in red. And you'll notice immediately there's a very clear correlation. Whenever Elon Musk is mentioned, so is Dogecoin. And when the red spikes like Dogecoin are spiking, you'll notice that it's very close to a price direction reversal. Like right here, when Doge really peaked on April 15th, it was followed by a big drop. And that was, of course, somewhat related to just the market-wide drop. But regardless, the lesson that we've really learned here when an asset starts to spike is it usually indicates a directional change. I'd say 80 to 90% of the time, it's a price drop that follows, because usually when an altcoin is spiking, that's because of the fact that the price is ascending. But there are exceptions, like here. Many people were calling for the top.
Actually, Brian, you can share or you can plot the price of Dogecoin instead of Bitcoin. It's probably a better.
Oh yeah, of course.
Yeah,
I
so
actually was under the presumption that it was already showing. So let me make sure that's accurate. Dogecoin here in the URL and DOGE right here. Yeah, that works. This will probably be even more clear. Yeah, so now it's way better. So the red spike here, almost right at the top, right? And as soon as social volume dropped out, that's when it started to rise again. So the lesson we can learn, and it's very clear in tons of examples, I just used Doge because it's so topical and recent, is that when prices are rising and social volume suddenly spikes, that's the time to take profit. When disinterest occurs and people are over that topic, that's generally when the bounce can occur. You saw it repeated here when it started to spike again. And then way over here, we had that temporary bottom. We had a mild drop off and then a huge rise again until another spike occurred right here. And that's when the true top came in. And now it's starting to fall. It's kind of in the mid range right now. So, the crowd sentiment will really dictate whether we start to bounce again, if we start to see disinterest, or we may see a continued decline if the social volume stays high. And of course, here in the blue bars, we can see just how correlated Elon is to Dogecoin. Um, Another example I want to show would be simple mentions of buy versus sell, right? In blue here, we've highlighted the words buy, buying, or bought. And in red, we have sell, selling, or sold. The reason this is significant is because when the crowd generally starts to in enhanced numbers call for a spot where it's time to buy, that's generally going to give a price a small lift, but it won't last long, because of the fact that crowds can't start a bull run. That's usually what whales do, right? But they can, on the short term, cause a price to rise by calling for buys, or they can cause a temporary drop off by calling for sells in massive numbers. But generally, it's short lived, like we saw here, when we already were having a bit of a rise, and then the crowd jumped in saying it's time to buy. And you can see very clearly there was a short jump from about, it looks like 59.8K all the way up to 61.5. But then look, everyone got duped while they were FOMOing in here, and we had this huge drop down all the way down to 55, 53.9K. So that was a big drop off. And you'll see that in both directions. Like, you saw it here, for example, we already were having a big decline. And then we had this huge spike in people mentioning it's time to sell, or they had sold. The price declined a little bit more as the crowd recognized that everyone else was saying it was time to sell. And then we had this huge bounce. So that's very often a pattern that I see when comparing these two terms here. You'll see maybe a temporary reaction, caused by the crowd deciding it's time to buy or sell. But then there's a much swifter move in the opposite direction to that spike. And that's kind of the lesson here that we can take from using sand trends. And you can use it for tons and tons of different topics. Basically, any crypto related topic, you can kind of use it similar to how you would use Google Trends and compare two different topics here. You can even click on, this is going to get busy, so I'm going to take off sell here and only show you buy. But you can click on social dominance, which is going to load here. And that's going to show the percentage of mentions over time for buy, buying, or bought compared to all crypto topics. Now I'm going to give it a refresh here because usually if it lags this much, oh, there it goes, just as I was about to refresh it. So you can see not only is the social volume overlaid here now, but these orange spikes are actually the percentage of mentions compared to all crypto topics. And you can see that even though this wasn't the largest blue spike in the world, it was kind of a down day in overall crypto discussion. And the percentage shows that it was over 10% in terms of talking about buy, buying, or bought. And that's massive. And it's no wonder that there was a really swift correction after the FOMO was kicking in right around here. That's pretty normal to see. Here, for example, like even though the social volume was high, the dominance was a lot lower compared to this spike. And that's because there was already kind of a lot more people on crypto platforms at that time. And the last point I want to make before I hand it off to Dino, who's going to get into some really nice examples, is that we use 5 different platforms to track social sentiment. That would be Discord, Telegram, Reddit, Twitter, and pro traders chats, which kind of is a conglomerate of different pro chats that are public facing that we can plug our data into. And this gives us a really wide spectrum of different places to see where mentions are made. And as you can see me scrolling down here, you can actually see that we break it down by each platform. So you can see that Telegram is spiking at one spot. Reddit spiked a little bit before Telegram here, which is interesting to see. Pro traders chats were a little bit after both Reddit and Telegram. And then Discord had a really big spike a couple days before the others did. And generally speaking, we have found that Twitter is the most reliable platform of them all because it has the largest data set. And it's kind of just how we built our platform around in terms of gauging positive versus negative sentiment, social volume, and everything like that. So keep in mind that you don't just have the overall data here, you can also break it down by platform, which I find really awesome. So all that being said, I'm going to take a break here, hand it off to Dino, and I'll probably be back toward the very end of the call to go over a few other examples.
Thanks, Brian. Sharing my screen. Guys in chat, let me know if the screen is visible. But overall, Brian gave a pretty good synopsis of, first of all, the channels that we track. So like he mentioned, at the moment, we track around 1,500 different crypto-related or crypto-specific social media channels. So this includes Telegram groups, crypto subreddits, Twitter accounts, pretty much everywhere that we can find the main topic of discussions being cryptocurrencies. We try to listen in and develop metrics around those conversations. So Brian already shared our social trends list, or SAN trends, which is basically a dynamic list that gets updated once an hour, and it shows the top 10 words, not coins, tickers necessarily, but just words overall or phrases that are gaining the most ground on crypto social media. And that was basically the first thing that we developed when we started this social data set of ours that pretty much nobody else has on the market. Is we developed this list of the top 10 trending words, and over time we realized that every time that we see a coin's name appear in the top 3 positions on this list, it usually indicates that, especially if it happens during a price rally like it's happening for Dogecoin at the moment. So if we go to SAM trends here, we see Doge is number 1, we see Link is number 2, and if we check out what's going on with Link right now, I think it just broke a new all-time high. There we go. So, I mean, obviously a pretty good reason for its social volume to go berserk, right? Because it's pumping like crazy. But anyway, very early on, what we realized is that when you see these massive spikes in social mentions, and when a coin, especially when a coin's name ends up in the top 3 positions on this list, it's usually an indicator that the crowd is becoming a bit too hyped for its own good, and the market euphoria is reaching its peak. And as a result, pretty much everybody that is aware, that wants to get into the rally is already aware of the rally. So there's going to be a less of a buy side pressure moving forward. And as a result, these coins tend to experience a short-term either consolidation or correction over the next 1 to 2 weeks. So we've done several back tests to figure out whether we can actually visualize this phenomenon. The most recent back test that we've done was 2.5 months ago, especially precisely on this idea. So our premise was, all right, we have this idea that when a coin claims the top 3 positions on our list of social trends here, it usually indicates an elevated risk of a short-term correction. So what we did is we looked at all of the different instances over the past year where a coin's name or a ticker ended up in the top 3 positions on this list, and then we tracked or plotted the average price performance of all of those coins in the 2 weeks before they end up in the top 3 position on our list and the 2 weeks afterward. So this is the there's an entire backtest and a backstory here about how we came to this conclusion. This was the first backtest that we've done back in June of 2020. Now you can see here that it only looks at about 200 different events. By events, I mean every time that a coin ends up in the top 3 positions on our list. But overall, the trend was very clear, right? In the 2 weeks beforehand, we see, especially in the 4 days before the event triggers, we see massive spike in the average price performance of these coins, which makes perfect sense because the reason that they are all of a sudden getting talked about so much more is because they're pumping, right? Usually when it comes to mid to low cap coins, pretty much anything outside of Bitcoin and Ethereum, you're not really going to see these massive spikes or upticks in social volume and social engagement and crowd interest unless the coin is pumping. It's just the name of the game. So on the other hand, in the next 2 weeks after the coin ended up in the top 3 positions on our list, we see this was the first backtest that we've done. We saw a correction of around 12.5% on average, right? Now, this was about 200 different events that we were looking into, and it was really maybe 6 months into the existence of this tool. So we did an update on this backtest, like I said, 2 months ago, and these were the results. So this time we looked at 650 different events. So the sample size grew by more than 200%. However, the results were very much the same. So this time we looked at the average price performance of these coins in the 20 days before and the 20 days after they appear on the top 3 positions on our list. As you can see, the average price performance of these coins grows from minus 25% and starts just going ballistic in the 6 to 4 days before, and then drops on average after the coin's appearance on our list. It drops on average, I think I have exactly, yeah, on average of 13% over the next 20 days. So once again, we had the same, we've done a refresher on the same idea, and the sample size being greater, we had the exact same results. So as a result of this phenomenon, of this theory that we have, we've developed a variety of metrics that allow you to kind of keep an eye on the social mentions and the social sentiment or mood of the crowd about specific coins. So as I'll show you a few examples of where we see these upticks in social volume for a particular coin and how they correlate with the price of these assets. So here we have an entire category dedicated to social metrics. You can find them under favorites, financial, and the number 3, social. These are all of the different social metrics that we've developed for each particular asset. So the social trends list or SAN trends tracks all of the words that we kind of collect on a daily basis. However, we have also sort of integrated the social metrics for each particular coin. So we're going to start with the most basic metric that we've developed called social volume. What social volume does is it shows the amount of mentions of this particular coin. In this case, we're looking at Maker, on all of the crypto social media channels that we're tracking. Now, this includes not just the word Maker, but also MKR and any other synonyms for this particular asset. And we're trying, for example, when it comes to Bitcoin, we are including words like BTC and Bitcoin, but we are excluding names like or mentions of Bitcoin Gold, Bitcoin Cash, so forth. So we're really trying to filter out the noise from these mentions and only focus on mentions that actually matter. So what I'm going to show you now is the mentions of Maker on crypto social media. So this is all over across all of the channels that we check: Telegram, Discord, Reddit, Twitter, so on and so forth. So these are the mentions of Maker in the past, 3 months, plotted against the price of Maker at the same time. So, I mean, the patterns become very clear. Sometimes they're clear as such, not always. Obviously, a lot of times you're not going to, no metric is a silver bullet. I start with this example because it's very obvious, but just keep in mind that, sometimes it's going to be definitely much more nuanced than this. But essentially what we see and what we often see are these major spikes in social mentions every time a coin begins to rally like crazy, and then shortly afterwards, as the crowd dissipates and the crowd interest sort of leaves and moves on to other coins, the crowd attention wanes. Once that happens, we see a period of consolidation or correction for the coin. So we had it here, and then most recently, just yesterday, as Maker hit an all-time high of about 6.1K. So these are some of the things, or some of the patterns or ideas that we are looking for when it comes to social volume. Another good example that I have prepared is Matic. Oh, I didn't select social volume. That could help. There we go. So once again, we have spikes in the social mentions for Matic here and here during local tops, and then obviously here at the beginning of consolidation for Matic. Now, I use this example here because in this point in time, there was a big spike in Matic mentions for whatever reason. I believe that this particular spike in mentions was something around Matic essentially having a large partnership or whatever announced. So sometimes you will see these massive spikes in social volume or social mentions when they aren't really connected necessarily to a price action. It usually happens for large caps and coins that are actually being discussed quite often on social media, something like Matic, Uniswap, Chainlink, and so forth. However, you can definitely see that during the period of this spike in social volume, we didn't really see anything spectacular going on with its price action. In fact, Matic was ranging for about a month when we saw this massive spike in social volume. So you can go on Google and then check out exactly why there's most likely the spike in social volume for Matic, but just based on its price action at the moment, it doesn't seem to be connected to Matic pumping or whatever. So given the fact that this spike in social volume is likely not price related, you can kind of sort of lower the impact that it's supposed to have on its price action. However, this spike, and these ones obviously sort of coincide with massive upticks in the Matic's price, and as a result are completely and obviously evidently price related, and as such can often have an adverse impact on the price of the coin in question. Now we can also check out a few others. Let's check out Banker, and I'm gonna look at the 8-hour interval. By the way, you can set the interval that you want for these social mentions. So currently we were looking at the 3-hour interval, but I'm gonna make it a bit more dense so we can see it a bit more clearly. There we go. So this is these are social mentions for Banker on an 8-hour interval. This is the last 6 months of Banker's price action. So we can see big spike here, spike before a short-term correction, another spike before during a local top, and then finally massive spike. First of all here before this short drop, and then an even bigger spike around the new all-time high for BNT. So these are basically or essentially the patterns that we very often see when it comes to social volume and the relationship that the social mentions of a coin have with its price action. Essentially, when you see massive spikes in social mentions of a coin while the coin is pumping, what that usually suggests is, it's not people being super rational about the coin. It's not people typing, oh, I really think that BNT has strong fundamentals. And when you look at its partnerships and you look at how the team is sort of staying true to its roadmap, I really think that it has long-term potential. No, I mean, these are usually mentions of FOMO, rocket emojis, buy, all of these sort of indicators of super overvalued market conditions in the short term. As a result, whales are usually panicking a little bit and start dumping on the crowd. And number two, like I said, at this point in time, there's really not a whole lot of new money moving into the coin. Everybody that wanted to get into the coin is obviously aware of it and is trying to hype it up even further. So because there's going to be an absence of further buy-side pressure, we usually see a short-term correction for the coin. Now, like I said, there's not always going to be like clearly or super evident patterns like this one. If we look at Doge, so if you look at Doge, I think you can kind of see the same thing. First, we had this massive spike around the local first bump. Actually, this was the first bump. Now it looks like nothing because Doge obviously had a ridiculous price action over the last couple of months. But we had a massive spike once Doge started rallying. Immediately, we had a period of consolidation, another big spike after or during Doge's sort of a short-term top, and then boom, once again, and we can zoom in a little bit so you can see in the last 3 months. Okay, let's move change the interval. There we go, 4-hour interval. We can even, let's say, take a 2-hour interval. Let's see what happens. That's a bit clear. So another sort of cluster of social volume spikes as the Doge began to rally, suggesting that the crowd is becoming a bit too overhyped for its own good. We correct. We had another big cluster of spikes. We correct. And then most recently, again, the crowd is starting to talk about the coin very often and at a high intensity, suggesting that we're probably due for a normalization of these metrics. So as a result of these types of movements or relationships between the coin's price and the coin's social volume, usually you want to use social volume as a top indicator. It's not really a metric that you can very often use as bottom indicators. Now I will show you 2 ways that you can potentially use it in that way. However, more often than not, what you want to look at, like if you're, for example, invested in a particular coin, what you want to make sure is not happening for that coin is that there's a big spike in social volume as it pumps, because it's if that happens, you might want to consider reallocating parts of your portfolio, right? So two ways that you can sometimes sort of use social volume in a adverse or in an opposite way, meaning trying to capture bottoms for a particular coin or the market in general. Number one is by looking at Bitcoin social volume. So like I said a minute ago, usually for most coins, when you see spikes in social volume, the only time that those spikes happen is when a coin is pumping, because otherwise nobody cares about Matic. Nobody, like, even though Matic is, or Polygon now is one of the most important sort of L2 solutions at the moment for Ethereum, nobody really cares about the coin, or like 80% of people don't really care about the coin unless it's pumping, right? So that's when you're going to see these massive spikes in social volume. However, and that's a big however, when it comes to Bitcoin and sometimes Ethereum, you are going to see spikes in social mentions, not just during rallies, but also during bottoms. And that makes perfect sense because, well, first of all, the way that Bitcoin goes, very often the market goes itself. And in general, Bitcoin is the most popular coin. So people, are going to be talking more about it during corrections than they're going to be talking during like a KNC correction, right? That's going to be discussed in very narrow circles, whereas Bitcoin dump of 15% is going to be the story of the day, right? And that's why, yes, you will see upticks in social volume during periods of sort of rallies for Bitcoin, like here and here. However, you will also see local bottoms sometimes being earmarked by spikes in social volume. So we see it here, and actually, maybe I can zoom in here so you can see it more clearly. I think zooming out is actually more clear. Just so you can put it in context of exactly how different it is compared to the rest of the last 6 months. So we had a first big spike in social mentions here after Bitcoin basically had, I think that was about minus 15% correction. It was the worst week for Bitcoin since the coronavirus dump. There were about $10 billion liquidated on high volume exchanges. So this was the first time that we saw the crowd really start talking about Bitcoin at a rapid clip compared to its previous month. And then we saw another two sort of spikes in social mentions for Bitcoin around local bottoms. And then most recently, as Bitcoin started to correct, we had another big spike in social mentions of Bitcoin, suggesting a potential for price recovery, short-term price recovery. So sometimes, even though there will be spikes in social mentions as Bitcoin rallies, suggesting that we might be a bit overvalued, like here, 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 and here, you will also sometimes see sort of spikes in Bitcoin social mentions marking local bottoms. So this is, number one way that you can sometimes figure out whether we are, due for a short-term price bounce back is by looking at Bitcoin social volume, especially as the coin corrects. The second way that you can sort of use social mentions while you're doing due diligence, let's say you're looking to invest in a project, or you're kind of doing your own due diligence on a particular coin, and you're wondering whether now is a good opportunity for that coin to enter into a coin or not. So usually the only thing that you really want to make sure is happening when it comes to social mentions is that the coin social mentions aren't very high. That's really about as complex as you should go. Like, for example, if we look at, I don't know, IFI, and we'll look at its social volume. Currently, like, we saw a few sort of spikes in social mentions of IFI here as it began to rally, but at the moment, IFI is on an upswing. However, its social mentions are currently lagging behind its price. So obviously you would want to compare a bunch of different both technical and fundamental indicators before entering into a coin. However, from a social perspective, the only thing that you really want to make sure is that there's not a whole lot of added chatter to the coin. meaning that it is currently flying under the radar a little bit, which could allow its price to appreciate before we enter the basically sort of a danger zone for that coin in particular, right? So these are the ways that we use social volume, and we use it literally on a daily basis. Anytime that we see a coin pumping, we go immediately, like one of the first indicators that we consult, especially if we don't have on-chain data for that coin, because at the moment we track on-chain data for Bitcoin, Ethereum, all ERC20 coins, Litecoin, BNB, and a few other coins, but we don't cover the entire cryptocurrency market with social data, with on-chain data. However, we have social data for pretty much every coin in our database. So that's why, you know, if, for example, you're looking into something like Polkadot or Cardano, we don't have on-chain data for them yet. However, we do have social data for them. So it's another sort of venue for you to explore if you're interested in those particular coins. So that's going to be it as far as social volume is concerned. Now, before we go into something a bit more advanced, which is social sentiment, Brian, anything you want to add here?
Sorry, I was muted there. We also have the, you can hear me now, right?
Yeah, I can hear you.
Okay, perfect. Yeah, we also have this emerging trending assets page that automatically will show which assets on the top 10 are getting a significant rise, you know, in social volume, and actually can show, let me send you the link here and you can just show on your screen here, Dino, while you're sharing. It actually shows like their social volume, a little bit of price performance, and it's an easy way to sort of recognize which key ones are kind of ones to watch and when to take profit. It also shows like development activity, what their market segments are, volume, stuff like that.
Let's check it out.
I think it's really cool. Shout out to Gary who created this.
Yeah, so this is a list. We showed you a minute ago this list of top trends overall on crypto social media, right, on an hourly basis. However, this also includes a bunch of topics that are not coin related. Like for some reason, the crypto crowd is talking about SNL more than usual at this point in time. We don't know why, but they are. So this list is meant to sort of only look at the coins that are gaining the most social volume compared to their previous 2-week average at the moment. So it's basically Doge, Chainlink, Ethereum Classic, and Coinvest seem to be the top 4 assets that are currently being discussed the most according to this list. So this list essentially of emerging trending assets, which you can find by going to watch lists and then emerging trending assets, it filters out the noise from this list of social trends, and it only looks at the coins or the tickers that are appearing very high up as far as our social data is concerned at this point in time, and it gets dynamically updated every, I think, 5 minutes. So yeah, thanks for the mention, Brian. All right, so the last sort of so we talked about sand trends and social trends. We talked about social volume. So the last very sort of important metric that we use as far as social data is concerned is social sentiment, and this is something that we've developed in-house. Our data scientists developed their own social sentiment algorithm. Therefore, there's really nothing. It's still experimental. It works for some assets better than others, but there's really nothing like it on the market at the moment. So, first of all, let's talk about what social sentiment is. So, when we look at a chart like iFi, for example, sure. We see some, peaks and valleys as far as its social mentions are concerned, but we don't really know what the crowd is saying or how the crowd is feeling about iFi at any given point in time. So on this chart, the only thing that we see are the amount of mentions of our iFi or iFi related mentions on crypto social media. We're not seeing the mood or the sentiment of these mentions, whether they are positive, are they negative, is the crowd super bullish about iFi at the moment, is the crowd super bearish about iFi, and how do those mood swings correlate with the coin's price action. So because of that, we have developed another sort of metric using the same data set called social sentiment. And you can find it here under sentiment or social data here. However, I usually like to look at it on graphs. So graphs is an additional platform that you get access to when you subscribe to Sanbase Pro. It's graphs.santiment.net/social. And here you have a number of different social metrics that we track, including relative social dominance and a few other that are fairly cool, like spam index. So I'm going to start with Bitcoin. And what we're going to look at, and let's take a daily interval. You scroll all the way down to the bottom to find this metric, because it's the metric that we most often use. This metric is called Bitcoin weighted social sentiment. Essentially what it does is it takes the, and I can show you here, we have a chart that shows the positive mentions of Bitcoin and the negative mentions of Bitcoin. So the way that we do this is we take all of these messages that we collect on a daily basis, and that's about 100,000 text messages from social channels daily, and we put them through our filter that has been trained on Twitter's data, machine learning algorithm, and we try to label these messages, incoming messages, as positive or negative or ambivalent. Now, we don't try to overfit this model, so we only, out of the 100% of the messages that get passed through this machine learning algorithm, we only include about 80% of the messages in the end result. So the messages that our model or our algorithm is not really sure about whether, about the mood of those mentions, whether they're positive or negative, we kind of put them aside in order to ensure that the end result is as clear as possible. So what you get is you get these positive and negative mentions respectively. And then the end result really is this chart, which shows the difference between positive and negative mentions for Bitcoin or any specific coin, adjusted for the amount of mentions on a daily basis. So in very simple words, what you are seeing on this chart is these massive spikes in social mentions in social sentiment suggests an increasingly bullish sentiment towards a coin. So these 0, 1, 2, 3, 4, 5 point to the standard deviations from the mean. And then as you see these dips in this average sentiment, what it means is that the crowd is becoming increasingly bearish towards a particular coin. So we're looking at Bitcoin social sentiment over the last 2 years. And one of the things that you can kind of get a glimpse of and kind of get a sense of is the fact that every now and again, we see these massive spikes in social sentiment coinciding with periods of either price consolidation for Bitcoin or price correction. And in fact, if you look at this chart, you're going to be hard-pressed to find periods where there were spikes in social sentiment and there was sort of a sustainable rise in Bitcoin's price. So first of all, we look at 2019. This was the top. Now it looks like nothing special, but this was actually the peak of Bitcoin's price in 2019, and we immediately saw two sort of big spikes in social sentiment, suggesting both at this top and then again at this one, suggesting that the crowd was becoming, after a relatively bearish mood, we saw a massive uptick in relative positivity towards Bitcoin, and immediately we went into a short-term correction and then a period of consolidation, and then once again we had a major spike in Bitcoin social sentiment on most significantly on May 12th here. So some of you may remember that this was the date of Bitcoin's scheduled halvening. So if you also remember, at that time, there were a lot of people expecting a massive price uptick for Bitcoin immediately after this event. A lot of people thought the halvening was going to essentially pump Bitcoin within a week's time from 8K to 16K to 20K and so forth. So there was a lot of expectations around this halvening, and as you can see, there was obviously this was showing that we had a massive spike in crowd euphoria towards Bitcoin around the time of its proposed halvening. Halvening came and went. There's nothing really that happened to the price of the coin, likely or partially at least prompted by this massive rise in social sentiment for BTC. And it wasn't until we went into an extremely bearish territory where the crowd started giving up on the coin that we were finally able to break 10K. And then immediately the crowd once again went super FOMO. Rocket emojis were being shot left and right. And as we once again spiked into this massively overvalued period for Bitcoin, the price action started to reflect that and started trading. We started ranging. And then once again, we had a market-wide crash on September 1st, gone back into extremely bearish territory, and then we started to recover once again. And even here, when you look at more closely, sort of over the last 6 to 7 months, we had this period of bullish sentiment towards Bitcoin starting here. But it wasn't until we went back into a bearish territory on average right here that we were able to break 20K. And then the same thing happened once again here. We went, the crowd became very sort of euphoric once we broke 20K. The spikes in social sentiment eventually led to a, price normalization. We went back into the bearish territory where we were, and then, once again broke above. So more recently, we had another sort of cluster of sentiment spikes. We went back into a bearish territory, went back into bullish, immediately a short-term top. And then finally, after a period of price uptick, which coincided with a bearish sentiment for Bitcoin, once again, we saw a massive spike in bullish sentiment coinciding with, so far, Bitcoin's all-time high. So overall, this is something that we, also wanted to backtest and figure out whether there are any sort of whether there's any proof for this idea that extremely high or bullish sentiment can actually be a negative sign for cryptocurrencies because it suggests overvalued conditions. And on the other hand, whether these sort of major drops in the sentiment can suggest that the coin is currently undervalued, that there's a lot of sort of negative sentiment and negative emotions towards it. So in this same article, Peak Hype Backtesting the Impact of Social Media on Cryptocurrencies. Max, if you want to link to this article in the chat so that people can take a look. In the same article, after we've done a backtest on social volume, which I showed you a minute ago, we've also done a backtest on social sentiment. So social sentiment, like I said, for Bitcoin in particular, looked like this at the time that we wrote the article. And this was the first of the two backtests that we've done. So we've looked at the average price of all of the coins in our database in the 20 days before and the 20 days after they hit their local peak bullish sentiment. So for example, for Bitcoin, that would be here, right? So the 20 or here. So we looked at the price performance or price action of these coins in the 20 days before the crowd became super FOMO, and then the 20 days after. And even though obviously, compared to this one, it's not as clear and it's not as smooth because this backtest was bang on. Exactly at the top, we saw a massive, the beginning of drop for the average price performance of these assets. Still, we can definitely see the patterns repeat overall. So in the 6 to 4 days beforehand, the average price of these coins starts to grow, increase dramatically, from basically increase by 10% on average. This is actually almost 12% on average. And then over the next 20 days, we see a short-term correction for the coin going from, well, basically dropping by an average of 6% on over 3,000 different events that we have tracked. So once again, this backtest has shown some promise to validate our theory that when you see massive spikes in bullish sentiment, it usually isn't a great friend to cryptocurrencies. And it usually, especially when it happens during a price pump, it suggests that the crowd is becoming a bit too overzealous and the market is becoming it's overvaluing the coin. It's essentially the same idea as when you're looking in for a Bitcoin's funding rate, for example, on derivatives, right? So basically when the funding rate is high, it suggests that Bitcoin longs are paying Bitcoin shorts, and therefore the market is long on average and bullish on average. And as a result, a lot of people believe that high funding rates suggest overvalued conditions because the market is bullish on average. So it's sort of the same idea. And then the second test that we've done is what happens with the average price of the coin after it hits peak bearish sentiment. So for example, what happens in the 20 days before and after we hit peak bearish sentiment, like here, for example, or like here. So on, once again, I believe the same sample size of 3,500 different events. The average price performance of these coins starts to rally in the few days beforehand. However, after we hit the peak bearish sentiment, when the crowd is very sort of undervaluing the coin, the price rises. Relative to what happens after we hit peak bullish sentiment, it's not super aggressive. But the price begins to rise over the next 6 to 20 days. So once again, it's similar to what I mentioned maybe 15 minutes ago with the fact that social data is much better poised to be used when you're trying to spot short-term tops, local tops, and risks of corrections. However, it seems like even when you're doing it the other way around, if when you're looking at potential price recovery or price bounce back areas for the coin, what you want to see is ideally these types of low levels of or basically very bearish sentiment, suggesting that the crowd is not really overvaluing this coin at the moment, suggesting that the crowd is very much kind of I'm not sure. I think we're probably due for a correction. And this is usually the time when there's blood on the streets that it can be an interesting opportunity to get into a coin in question. So I'm going to share a few more examples. This is Bitcoin, but I'm going to share a few more examples of coins that I've prepared. Number one is Uniswap. Okay, let's check out Uniswap. Let's take last 12 hours, or sorry, the 12-hour interval. And I think you're going to see in a few of these examples that it's not always as clear as you might want, but that's life, right? So this is Uniswap. Obviously, there's more data even before Uni token was launched because people were talking about Uniswap and Uni in general, even before its price action started, right? So you see massive spikes in Uniswap's social sentiment immediately after it broke I think it was $5. And then as a result, we had this period of basically like what is this, like 3 month ranging for Uniswap. If you remember how hyped the crowd was when this airdrop began on September 19th, I think there was nobody that was paying half attention to the market that couldn't have seen this coming. Like, it was very clear that the crowd was becoming super bullish about Uniswap's short-term potential, and it was mostly to pump its newly found airdrop bags, right? So after the fact, we had a period where Uniswap finally went into a mega bearish territory, like compared to its previous 2 to 3 months. We started to rally. We had a sort of period of the first sort of uptick in Uniswap social sentiment, coinciding with the short-term correction. We went into a bearish territory, and then when Uniswap broke the $30 mark, I believe this was the first time it broke it. Yes, we once again had a massive spike in its average social sentiment, suggesting that the crowd was, like, okay, we finally broke this resistance. Next target, whatever, something ridiculous. Immediately we went into a short-term consolidation pattern, and then once again after Uniswap broke $35, we had another period or another cluster of social sentiment upticks or spikes. We had another period of correction for the coin. After it broke $40, we had another big spike in social sentiment, and so on and so forth. So essentially, while you're going to miss some of them, like for example here and here, right, when you didn't really have any spikes in social sentiment, when they do occur, it usually isn't a great look for the coin in question, because it does seem to suggest, especially if it happens while the coin is pumping, it seems to suggest that the crowd is going full FOMO. And generally, you're kind of you're at that peak hype level, and there's not really a whole lot of space for its price to grow from there on before we normalize. All right, one more coin that we want to maybe look into. Let's see, I've got Doge, I've got Cardano. Let's look at Cardano. Okay, actually, maybe let's look at 1 day interval, just because it is very like Cardano's data is yeah, there's like 2 or 3 years of data. if we zoom in here, oh, right, this is what I wanted to show. Basically, it's the, actually, we can zoom into the 12-hour interval because we're only going to be looking at the last 6 months or so. Okay. Yeah, so similar thing then to what you saw on Uniswap. So we had a few spikes along the way, like here at the local top, and then as Cardano started to pump here, we had another sort of cluster of spikes before a correction. We had another spike in social sentiment right around its local top here, and then once again, as Cardano's hit its all-time high at that point in time, 1.35 bucks. Once it broke it, just slightly, we had another, not as prominent, but definitely a clear spike in social sentiment, average sentiment towards Cardano. And then most recently, the big spike in social sentiment started right as Cardano began consolidating and its price beginning to normalize. So these are some of the things that we see every so often when the coin's social sentiment is very high, when the coin social volume is very high, when the coin appears on this list of social trends. It usually seems to indicate that there is at least an increased risk of a short-term correction, of short-term consolidation, because the crowd is becoming way too overzealous for its own good, right? Before we show you how you can set alerts and alarms for these types of metrics so that you can get notified once the coin that you're interested in gets too overhyped, Brian, anything you want to add?
No, I am gonna leave you to show the alerts. As I mentioned before the call with you, Dino, I've got a hard stop right at the hour, so I'm gonna drop off here. But just from my end, I want to thank everyone here in the webinar for joining us. And I really highly recommend using our social metrics to your advantage. They are arguably the best and most valuable asset on our platform. I think that they really do a great job of gauging the crowd sentiment and showing whether they're being greedy or overly skeptical at any given moment, and just identify them accordingly and know that when crowds are looking in one extreme or the other, the goal is to go against them as much as you can. You don't want to be following along with crowd greed or crowd fear at any given time. And if you are sort of countering your trades according to what they're believing, you're going to find success at a far higher ratio than 50%. And that's the goal here. So thank you all, and I'll leave it with you, Dino. Thanks for the great examples you're sharing.
Thanks, Brian. All right, let's just round it up with showing you how to set up alerts for some of these metrics. So Brian, can you hear me, by the way? I think Brian left. Yeah, I think, Max, can you hear me as well? Somebody just to confirm that I am coming through. Okay, good. All right, so last order of business, how do you set up alerts for some of our social metrics? Very simple. You just click on add alert, and always the default alert type is going to be price. So you just click on the change alert type, and then you have two options. Option number one is simply to click on Santiment here, and what that is going to do for you is it's going to notify you, or going to let you create an alert the next time that, in this case, Maker ends up on the list of our social trends, which is this list. So, if you only want to keep an eye on this list and, get notified when the coin that you are invested in or the coin that you're interested in, becomes super talked about on the market, you can simply go to Sand Trends, say trending assets. And basically what it will do is it will notify you the next time that Maker as a coin ends up on a list of social trends. And, you just create an alert from there. The other way around is that you can go to social here, and here you have more options. So instead of simply going to only being notified when the coin's name appears on this list, you can set up more clear or sort of more granular conditions for being notified. So for example, you can say, okay, let me know the next time that Maker social volume goes above or below a certain percentage point or a certain absolute number. So for example, let me know that the next time that Maker's social volume rises by 100%. And you can see that that specific example or that specific condition would trigger 4 times in the past 3 months. It would trigger here, 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 and here. And as we saw for Maker, these were all local tops for MKR. It's not always going to be as simple. Obviously, like I said, there's really no silver bullet to these things. However, this is another way that you can kind of set up alerts for social metrics. So let me know the next time that social volume goes above 100% or 150%, whatever you kind of think is a good level for you to keep in mind, right? And then you simply create an alert for this particular coin. Finally, you can also set up alerts for social dominance, something that we've just briefly touched upon. And Brian mentioned that other than social volume, we also track social dominance for a coin. Social dominance is the amount of mentions of that coin compared to the totality of mentions or totality of messages that we collect on a daily basis. So you can say, okay, let me know when the coin's social dominance rises by, 50% or whatever, suggesting that compared to everything else on the market, it's getting talked about just a little bit more, and that might be relevant to you as a trader, right? And then finally, one other thing that I wanted to mention is that if you are, let's say that you have your own portfolio, right? You have your own watch list, and you want to kind of gauge get a very quick glimpse of what coins are being very much talked about, and then what coins are not being very much talked about. Now, for example, I have a Kraken account, right? Not sponsored, I just have it. So I have a list here of Kraken coins that I'm sometimes interested in basically checking out, right? And one of the things that you can do, this is a screener, by the way. So this is this is a watch list that I have. Now, one of the things that you can do is you can take this watch list and you can select social volume as one of the columns. So for example, social volume 1 day percent change. And what that is going to do is it's going to show me all of the coins in my watch list that I have created, and it's going to rank them by the 1 day percent change in social volume. So for example, I'm seeing that on this list of mine that I sometimes pay attention to, Aragon currently for the last day has the biggest spike in social mentions compared to its previous sort of mean. And then on the other hand, we have iFi that it has dropped the most in terms of social mentions compared to its previous day. So another thing that you can do if you type in social is you can do 7 day percent change, 30 day percent change, and social dominance as well. So for example, 7 day percent change, let's see if that changes anything on our list. Yes, it does. So the biggest coin in terms of a weekly uptick is Gnosis. It's got 126%, an uptick of 126% compared to its previous week. So it's definitely getting talked about more than it did previously. And if you look at its price chart, it's not very surprising to see why. So from then on, you might want to get into that, get into analyzing the coin a bit more if you are in it already, to make sure that it's not getting a little bit too risky to hold this coin for in the short term, right? So guys, that's gonna do it for this webinar. We're just at the hour mark. I want to thank everyone that's joined this call. This was another webinar that we have another one lined up for tomorrow at the same time. Yesterday, we did a webinar on the whale activity and the behavior of large addresses for a lot of different coins. If you haven't seen that, check it out in our channel. It's the last video before this one. Tomorrow, at the same time, 6 p.m. Central Eastern Time, 9 a.m. Pacific Time, we're going to be talking about top valuation metrics for different assets. So we're going to be talking about a lot of sort of popular metrics that on-chain analysts use these days, like MVRV ratio and NVT ratio. And then we're also going to be talking about some of the metrics that we have developed in-house that nobody else really has, and how we use them to figure out where we are in a bull or bear cycle, like mean coin age and mean dollar investment age. So if you're interested in that type of analysis, same place, same time tomorrow at 6 p.m. Central Eastern Time, be there or be square. Lastly, Max, if you want to just flash it real quick on the screen, if you don't already have a Sanbase Pro subscription, it's just $49 a month for the first month and every month. However, if you're strapped for cash, we got you. So the next, I believe, 9 days, we're running a promotion. There's a discount code called Sand Spring Fling. So when you type Sand Spring Fling into your checkout, you're going to get 40% off your first billing cycle. Now, we're already one of the most affordable on-chain and social data providers on the market. However, I think this makes it sort of a no-brainer, at least for me, to try Santiment out. So when you log in for the first time on your Santiment account, you get a 2-week free trial. Afterwards, it's just $49 for your first month. However, with this, you get 40% off your first billing cycle. So that can be either a monthly or a yearly plan. Whatever you choose, you get 40% off. So, there's a lot of very interesting stuff that's going to be happening in the next couple of months, especially for Ethereum. So, we've got Uniswap v3 dropping today. We've got the Ethereum proposal 1559 that is going to go live, I think, next month. We've got Optimism, a lot of different major changes to the Ethereum ecosystem are going to be happening over the next couple of months. So if you really want to keep an eye on those, I definitely think that we are the most comprehensive providers of on-chain and social data for Ethereum-based coins. So if you're on the sort of edge about joining Santiment, I think this discount code should definitely push you over that edge, metaphorically speaking. Thank you, everyone, for joining me. Hope that it was insightful. Hope that you learned something new. If you have any questions for me, jump into our Discord. The link is in the description of this video. Go to our general channel and just ping me there with any additional questions that you have, and let's continue these discussions. Thank you once again, and talk to you tomorrow at 6 p.m. Don't miss it. Bye, guys.